Today I'm going to be talking about the step index. I know you have been seeing me sharing the signals of step index, but I never gave you a class about step index, but still it's the same as volatility 75. Don't be worried and say maybe step index has different moves or anything. It is still like, or like, let me say, all the trading, all the pairs or all the elements are going the same. It's just there and there where they don't just act the same, you understand? Especially when it comes to the pairs, because of they are controlled by economy. So they don't just go like indices. Indices, they are going straight and they are very easy. So the way they are easy is making them to be cheap, you understand? When I'm saying something is cheap, it's like you can get a move or a trend from here to here, you understand? It can take maybe the whole from the 15th of let's say the 17th of October, the whole 17th of October until November, it will be going up. So that's what makes indices cheap, you understand? Because of like when we check to the currencies, you'll find that this thing is happening. You'll find it or from here to here until it start to go down is still in November. Like this thing happened in November. So it means this thing, it can't be profitable and it can be cheap. It's where you can make a lot of money because of someone who hold from here from October to November is the one who's gonna make a lot of money and from a small account. That's how I grew small accounts. So when the market just go from here to here, it's not possible for me to just grow small account, but I can grow some of the accounts, but not small account the way you see sometimes me doing, like something like $10 to something like thousands of dollars or $500. You understand? It can be possible, but it's better when it is from here to here. So when it's here to here, it's a long trend. We call it a swing trade. And then when it's acting like this, we call it a what? A short trade, which is scalping. When we are trading, we say we are scalping. I agree in here why we say we are swinging. I don't know about the weight swinging. I just use the weight swinging because of they told me, or it's a long trade. You take a long trade or a long trend. So when you're holding from here, you're going to hold maybe for a month or maybe some weeks. You understand? So means is a swing trade. And then when you're holding from here, after 3 days, you're going to be doing what? You're going to be taking another trade. After 2 days, you're taking another trade. Something like this means market is not stable or is not giving us a long trend. You understand? So currencies, they work like this. You understand? Many people, they do what? They scalp. But me, I do what? I go for this. Mostly you'll find me losing a lot of money around here. Maybe let's say agree, you will never know, guys. And one thing you must know, or you will never know if now is the market is where the market what to just go up for a long period of time. As we see even here. That's why most of the people, they buy signals, they buy mentorships, they buy robots and everything. Is because of to predict the market is too hard, you understand? Because of now, we are not sure. Even me, I'm going to enter. That's why we call it a risk. I'm going to enter and say, I'm going to sell, but I'm not sure about this sell is going to happen until where or it's going to happen very, very, understand? So there is no one who knows where the market will go. And that's what makes us a profit, what we don't know, you understand? So even now, we are waiting to see, or like there is a confirmation. A confirmation is just where you're saying what you're gonna risk, not what you're gonna do or what is gonna happen. No, what you're gonna risk, you understand? So that's how the market works. So in order to know where the market will go or what the market can do, you have to check what happened before. Let's say, okay, sharp. This is where you wanna, like, let me say, for example, a simple example is about schools or colleges, you understand? If you know, okay, this college has been scamming a student or whatever, so you're gonna do what? You're not gonna go for it. But if you know, okay, this college has been giving good results, and is being teaching a student, and students are doing what? Are being successful from that college. You're gonna do what? You're gonna trust it and you're gonna apply for it. So it's the same in the market. So in here, we have to check what the market was doing last or previously. You understand? As I can see here, the market was starting to go up around here. You understand? So even me here, it doesn't matter the market was going down like this. You understand? I don't care about the structures or the shapes of what other people they're saying. I check what the market is telling me. If this market start to agree, I said, okay, sharp, I can take a buy in here so that this kind of things can happen. You understand? So if this market is going to take a sell, if this market is going to take a sell like this, from here and then starting, you see, your internet connection is unstable. That's what is bothering me. But let me just restart. Because of my Wi-Fi was very low. I'm using a phone, so I want it next to me. Let me check the phone so that it stays next to me. So if this market is gonna go down like this and then it doesn't go up, you understand, the way I predicted or the way I just did, I'm going to do what? I'm not good. I'm acting the risk management before the what? Before I can even do what? Before I can even enter the trade, I'm going to do my risk management before and say no. If I do have something like where's the text this here? If I do have something like where do I edit this text? Go here. Yeah. If I do have maybe $50, if I do have $50 in my trading account, if I do have $50, I'm going to risk $10. I'm going to risk $10. I'm going to just risk $10. Then when I risk $10, means I will be left with $40. So if the market doesn't go my way, I have to not lose the whole account. So the beginners, what do? They just go with a bigger lot size. Let me say, let me just open the calculator. We still have too much time in here to do what? To do our things. So if you want to get the calculator, go to the website of the seminars where you sign up for the seminars or where you sign up for the mentorship if you use the website. In here, once you enter the page, even on the phone, you can press the what? You can press the trading view is this what? And then here is the indices calculator. When you press here on the indices calculator, you just scroll down and press open indices calculator. It will open the calculator for you. You understand? As you can see here is the calculator for me, so that I'm going to use it. So in this area, I'm going to do what? I'm going to just say, okay, let me risk $10, and then maybe my TP was going to be around here. It's going to be around here where the market started to go up because of like I checked the previous move or what happened, and then I see, well, okay, around here the market started to go up. So the possibility of market to go up here is 98, maybe 90%, so that the market can go up. Yes, it can go down sometimes, but it is 90%. There is 90% chances of the market to go up. Even here, there is 90% of the market to go up. That's why I'm using my $10 in $50 so that I do what? I don't lose the whole account. You understand? So after losing $10, I will wait again. You will see something like this. Maybe the market start to go down. Again, back to the what? Back to the area where I said I want to sell, but I didn't sell. You understand? So why this thing is happening? It's because of this thing has been happening around here. As you can see, we see the spikes, green candles, red candles, mean the same thing can happen still everywhere. It can happen. It can happen. You understand? So in order for me to do a risk management is because of I know the market might just do a pullback. Sometimes you call it a pullback, sometimes some of you call it a retest, to understand. So mostly I just call it with different names so that we can understand. A language doesn't matter as long as you understand what we are doing. You understand? So now, as you can see, I lost $10, and then I see the market is still going down. Means I will be left with how much? I'll be left with $40. In that $40, I'm going to take another $10. I'm going to take another $10. I'm going to take another $10 and say, I'm risking it. Another $10. And then here is where the $10, I risked $10. I entered here. Means this thing is gonna be somewhere like this. You understand? And the market start to go down and then go up and then start to go down and then up and then down. I will be going to my what? To my TP here. You understand? By the time I am left with $40, understand? I am left with, even if it is $30, the equity will be $80. The equity will be $30 because of like the first $10 has been lost. Understand? So in here, you will find that from here to here is going to give me, maybe the tip is going to give me, let me say, I risk $10. If I risk $10, I think it's a lot of money. $10 is a lot of money to risk with one trade. It's a lot of money. When you try to risk $10, you have to risk something like $3, $2, $4. $10 is too much, guys. I think you will be using something like a lot size of 0.5, 0, maybe 2, 3. I think even a 3. 0.3. This index is not volatile, it is 25. So I think from here to here, it can give you something like let me just I can't use the calculator. It will take me time to copy and paste. There is a video for the calculator in my website. You can go for it. So I can see Master Nas raised the hand in here. Yeah, you can speak.
Oh, I wanted to ask Ori, this thing, how long is it gonna take for us to ride the sell? Because I see the big movement, like it's going as a wave, and it's on our support, it's on our previous support. So the moment it's after retesting, we're gonna go for the bigger movement, or wait for 2 days, 3 days.
I think you didn't start with the class in the beginning. So what you are talking about is when you are asking me where the market or what the market will do. So I never said the market will do this. As I was telling you, on this market, you will never know. There is people know. We are predicting.
Oh.
So about prediction, you will never say, okay, you can wait for 2 days or anything, because of you will always be wrong, you understand? So it's about risking. So even in here, whatever I draw like this, I never said it's a sell, and I never said it's a signal. We are still on the 24 hours time frame, and I'm just still showing the structure of the market, how to do a risk management and everything. I'll be giving a signal after when the class is about to end. You understand?
Oh, okay. I thought it's a signal.
There is nothing happening for now. It's just an educational.
No problem. You can continue.
Yeah. So in here, I was talking about the market. When it goes down like this, it might give you something like I wanted to put a text here. I said it can give you something like maybe let's say $600. I think we're still on examples. That's why I don't even calculate. Let's say in the profit, it can give you $600 since it's the step index, you understand? So when you take a sell, it's giving you $600 from here to here. As you can see, guys, like you just funded your maybe $50, and then when you funded the $50, you have already lost $20, and then you are left with how much? $80. And in that $30, you left with $40 before, and then you took the $10 and say, I'm going to do what? I'm going to try again for the second time. The equity, it will be $30, and then the $10 will be the one that is on the trade. I think, yeah, it will be on the trade because of already $10 will be out for taking the trade. And then now the equity will be $610. You understand? It will be $610 by that time when the market is about to hit the TP. You understand? When the market is about to hit the TP, means you can be able to do what? To make maybe something like maybe from $50 you can grow to $600. So now I'm talking about what I was talking about here when I'm saying a long trend or a short trend. So by that time you will be taking a what? You will be taking a long trend. As you can see, from here to here is $600. But let's say if this market was not going to go like this, you understand? This the market is not on a swing trade. Let's say the market is not on the swing trade. It's not on the swing trade, it's scalping. So you will find that the market maybe hit around here and come back. Hit around here. Agree, you see it is going like this. And then start to do this. Start to do this. Start to do this. As you can see, this one is a short space. It's not like where you can make 600. Yes, you can make 600, but not only with a single trade. You understand? You're gonna make maybe something like let's say $200. Let me see, 1, 2, 3, 4. Okay, let me say 5. Okay, 1, 2, 3. Let me say $100. This is the $100. Means for the first time, and you are taking the same lot size, and then from, let's say from here you took a trade. From here it says $100. You close, you take another trade, $100. You close, you take a sell, $100. You close, you take a buy, $100. Something like this. You'll be making $100 sitting down on the same level, like when it is going like this. So where is the danger? Where is the danger? Agree, you remember here the danger is because of when you took a sell and then the market just start to go up, start by going up, and then you lose $10 and then you lose another $10 or something like this. You understand? So where the danger is going to happen is going to happen when you are saying you're scalping, it goes down. You understand? You lose the whole, maybe you lose something like $10. When you lose $10, you start to go up. So something that you don't have to do because of like where the danger is here. When the market goes down, maybe you are in a profit, it goes up. You lose the profit, you leave it like this. Maybe let's say you say sell, it sell. You say buy, it buy. And then you say sell, it sell. And then you say buy, and then you start to sell. And you'll find that it's taking that movement that I was talking about before. You understand? So sometimes you'll have that faith of saying, it's a what? It's a, what do we call it? A fake breakout. It's a fake breakout. It's just going to selling in a little bit and go out of the box and then come back. And you'll find that it doesn't come back. When it comes to this position, you will find yourself losing even a hope that I made something like $200. Now it's on maybe $50 that I came with it in the market. So there is no way I can do what? I can close or do anything. Let me just leave it drown or leave it sink. You understand? So that's where the danger is. It's when the breakout is about to happen. You will never know if it is time for the breakout to happen. You will think maybe the market is still going to consolidate like this. But you see, even here, the consolidation happened. But at the end, the breakout happened. And it happened with the pullbacks. So when it comes to the breakout, if the market is going like this, and then the breakout is about to happen, you understand? The breakout is about to happen. You will never know even though, or the breakout is about to happen. You'll just say, hi, maybe it is still going to do what? Make a fake breakout. I guess this is a breakout and there is a big breakout. Maybe it will just start to go up from here and then keep on doing what? on the way like this. So there is other thing where my strategy come in. I wasn't talking about my strategy here. I was just talking about how the strategy work, how the market move, you understand? It's not my strategy. It's about how the market move. Because of like someone can be confused and say, oh, this is his strategy or anything. This thing that I was talking about, everyone do it. Even if it is a pair or whatever, a cost of 28,000 or a cost of 1 million, they do it, but not in the same language, you understand? So here we're talking about the breakout. In order to be safe, using my strategy on the what? On the breakout. Agree, you see we are on the bigger time frame. Okay, let me show you with the good example. As you can see in here where we are, the market is showing us, or it has been going down for 3 days. It went up for the whole day and then started to go down the whole 3 days. You understand? So what you're going to do is the prediction. That's where you're going to find a, what we call a entry level. That's where you will find it in entry level. And entry level, you find it in the smaller time frame. You don't find it in the bigger time frame. You find it in the smaller time frame. In the bigger time frame is where you're gonna see how the market will be acting for a long period of time. So now let's say, okay, sharp, we are on this time frame. We are on this time frame. We see support and resistance. Support and resistance. We can see support and resistance. Let's minimize like this. We can see the support and resistance. So now for this market to go down, it has many chances to go down. Why? Because now the market, the time it was going down from the resistance, from the resistance, it was going smoothly. Understand? It can make a breakout, a fake breakout. But for now, I think it will still go down. Understand? Because of in here, you can see when it goes down like this, that's what it shows, that it is trying to go down again. But in here, it was going down. The pullbacks are big, 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 big. You can't see, or even it's a pullback. Understand? So here, what is going to happen? The market can even go down until here and start to go up here. Understand? So this is where the market can consolidate for what? It's consolidating before it can shoot down. And even though when you're saying it's gonna shoot down, it can go up because of how? Because of from here, it was going up like this. It can start to go up. In the bigger time frame, we are talking about the moves that will happen maybe the whole year or the whole 3 months or the whole 2 months. We're not talking about something that will happen now. But now we want to make money now. You understand? So we will go to the smaller time frame. Even before we go to the smaller time frame, we check. First thing, to analyze faster. This is a red candle. It's the last candle. I'm not talking about the candles. When you say, hey, there is a candle Bibles or everything, I'm talking about what the market is doing, not only candles, what the chart is doing. Understand? Now you can see the market has went down and it is giving us the what? The retest or the pullback or the spike in the smaller time frame. As you can see now, it went up. And when you check in the smallest time frame than this one, smallest time frame than this one, like 1 hour, 30 minutes, 15 minutes, you will see, or this is a uptrend, a very fresh uptrend where someone will just look the market in the smaller time frame and say, the market is going up. But the market is not going up because of the what? What is happening in the smaller time frame is gonna push the bigger time frame. It's gonna push the bigger time frame. So what we see in the 30 minutes time frame, we see that the market is going down from here to here. The market is falling. You understand? You can even not draw it here. You can even draw it here, anywhere where you want. You see here. This is the trend line. This is the trend line showing me that the market, trend line, it is not like, it is not necessary so that it can touch the candles or anything. The trend line, you just put it. It's like I don't know, how do you call it? A battle pass. When you are building, there is that thing that you use. It has water at the end, even at the center. You see that thing? When you put maybe on the wall, you will see what this wall is straight or is falling under which direction. That's how my trend lines work. If I see okay sharp, I put it my building tool to measure where the wall will be falling. If it's showing or it is falling down, means the market is falling down. There is no need for touching. No, the touching doesn't work anything. So now I can see, okay, the market is falling. Let me go to, even you can even jump the time frames. Don't worry about the time frames and say, why I do have to jump? Like this thing doesn't go step by step as at school. Like you don't have to be told anything. Like now you find a support and resistance. I think it will be here. Something like this. Support and resistance. And other things will be the what? Will be the big breakout. Something like this. This is where you will do your risk management. Because of here is in the smaller space. Everything is happening fast. Then you come here. You check how you're going to do your account management. I mean, the risk management. How you going to do your risk management? I can put my stop loss here. I mean, the TP here. And the TP is not about the TP. It's about where I can lock the profit. And even here, it's where the market can start to go down. On here. You see, it can start to go down here. And from here, it can start to go up here. You understand? So here, like here, we are just trading for a breakout. For a breakout. It doesn't matter. Some of you, like some of the people are somewhere, they will be saying, it's too bad, It is too bad because of I said it's gonna sell, but it bought and it hit the stop loss. Why you think it's too bad is because of you didn't use the calculator. Now it's time for us to use the calculator. I want to show you how the things work. It's our time to use the calculator. I want you to see, or you are not a bad person. Just imagine losing what I'm going to show you here. Losing what I'm going to show you here, you're not a bad person. But if you just go with your head and say, I am going to work it out like this, it's going to be a problem. This calculator is for all the pairs. Okay, the step index that is not in there. The step index is not there in here, I think. Jumbo volatility. Yeah, step index is there. Because of last time, there was no step index. There was no stop index. But right now, the step index, I can see it. Yeah, I can see it. It is. It's for all. You don't have to set anything somewhere. You just come and write your things in here. 87, 67, 67, 70, and then stop loss 87, this 0, 65, and then we go for TP. And it says 875, 6, 0, 3. And then we go for the lot size. Here is where you will know which lot size which lot size is good for your your account. You understand? You're going to start by saying 0.01. 0.01 is the minimum lot size of what? Of step index. As you can see, your risk will be $0.29. You see that you're not gonna feel like you're a bad person after losing $0.29 in $50 or even $10. But if you just go and say 0.10 or maybe 0.5, 0, why doesn't, yeah, 0, something like this. Or let's say 83, 1, 3. Why doesn't go up? Oh, it's 1. If you say 1, understand, you're going to lose 2.95. And then you say 6. Someone will come with a $50 account and say, maybe he can save 20. A $50 account, obviously you can see or you will feel bad after losing this trade if it hit the stop loss. You understand? That's how the things work. You see, it's even going up. So after hitting the stop loss, if you didn't use the calculator, you will feel bad because of you lost $50 with one signal or with one trade. You will say, my analysis are not working, something like this. And it is not like that. It is not like that. The things were working. Everything was fine. You understand? It's just to you who even maybe sometimes you thought too much and say, I need $333 in a day, $233 in a day. That's where the problem comes. You will lose the account very fast. But if you come here and say, I'm taking at least 5 with $100, you're going to lose only $14. Understand? If you hit the stop loss of this account, yes, you're going to get $58. You understand? Like, it will depend on where did you put your TP here. You understand? So in here, when you lost something like $14, you can come again because of you do have what? You still have the equity. You still have the capital to trade. But that person who came with $10 and then take a lot of 5 on the step index, what is going to happen with him? He's going to feel bad because of he lost everything. That's what I tell you each and every day. You understand? Each and every day, I'm telling you this. But no problem. Let's go for here. And then I'm going to put this one here, from here to here. From here, it's gonna go at least down to here. And then I'm going to do the things. This is the signal. I'm going to take it like this. The signal. This signal is going to be like the entry level is 87, 67.70. The stop loss is going to change to 87.74. And then let me say 24. The TP is going to change to 77. Hey, TP is going to change to 87.80, 62. That's how it is. And then you can take your 0.1. The $3 is going to be a profit, but let's take 0.8, 0.5. Yeah, 0.5 it will do. You can take 0.5. So I'm going to copy there. What do we call? I'm going to do an order. Already it is still going up. I'm going to put it as an order. Step index, all whatever, and then binary, step index, and then sell stop, 5 min time frame, and then the TP. So the TP is the TP1, stop loss. Yeah, here's the stop loss, and then yeah, active, and then I can send the analysis. Send you the analysis quickly in here. And then yeah, the signal has been sent. You'll be receiving the signal right away. You understand? I did a what stop. Let me even take a trade on my side. I'm going to take, at least I said it's gonna be $3. Ne? I'm going to risk $6. $6. For your account, that side is going to risk $6. Well, I took a volatility state. Step index. That's why it was very, very fast like that. Yeah. Instead, I have to take the what? I have to take the orders, not the trades. Oh, order is sell stop. The price is gonna be. Let me copy from here. It's gonna be 87.6 at 87.6 7 and then comma 70. Stop loss 87.7 4.24. Number 2, CP 87.30.6. I'm going to take 2 trades. And then I'm going to say 87.67.70. Done. Then I placed my order right now with a stop loss and TP. So this is the end of the class, guys. I didn't find the straight trend. I just found where I can just place the order for now because of like the time is going to go down, is gonna go for a long period of time. I agree. We just checked on the bigger time frame and we saw rocky sharp. This market is gonna be doing what? It's gonna be going down for a long period of time. As you can see, it has been going down from here. You understand? So the time frame is about viewing the market. It's not about the entry level or anything. It's about the viewing the market. You understand? As you can see, everything that we put is falling down. Means this market is still going to fall down and cover this level. It's going to cover this level. The level that is going to cover is this one. So it can go up. It doesn't mean we can't lose a lot of some of the money here. We're going to lose, but we're not going to lose a lot of money. Just imagine we're going to lose, maybe per trade, we are going to lose $3. Doesn't mean your account must blow before this market can go down. It will try maybe 2 times or 3 times. That's why I said $10 is too young for trading, because of like you will try and try and try, and then you will find that for the 4th time is when the market will be starting to go down perfectly. You understand? So at least if you have $50, you're going to manage. You're going to manage to do what? To catch the market. So in here, I am doing what? This is where I what do we call? I manage the accounts, you understand? Once the trades are open, it's going to be showing in this page. I want to show you some of the trades and some of the accounts. This is the accounts that are connected. As you can see, this one has $105. This one has 0.19, means the trades can't open because of there is no money in here. So this one is going to open the trade. This one is going to open even this one. This one of 0, it can open the trade. And then this one is going to open. Even this one, it can't open. Even this one, it can open. 21, it will open. And this one will work, it won't open. And then this one, it will open. And this one is disconnected. I've been contacting this person, but he doesn't respond now, because of like they even put it off because of like they see what is not connected. You understand? So all this account will try to take this trade, but the one that they do have less money, the trade won't be able to be taken because of there is no money. Means 1, 2, 3, 4, 5, 6 accounts will open the trade. This is what I call a copy trade or an account management. So when you come for an account management, just know what this signal that has been sent, it will do what? It will be taken. You understand? Your account will open this trade, this order that I put it in. So guys, this is the end of the class. This is the end of the class. And then we are going to be watching the market and what is happening. You understand?